Okay, learning objective 3 begins at the bottom of page 290 in your book. Learning objective 3, at the conclusion, you'll be able to determine deductions from gross pay, such as federal income tax withheld, Social Security tax, and Medicare tax, to calculate net pay. So anyone who's ever earned a paycheck has encountered some type of deductions. As discussed previously in this chapter, gross pay minus deductions equals net pay. Following are the most common deductions. Okay, federal income tax withholding, state income tax withholding, FICA taxes, which consists of Social Security and Medicare, the employee's share, union dues, medical insurance premiums and medical expenses under a flexible spending plan, contributions to a charitable organization such as United Way, repayment of personal loans from the company, savings through the company's 401k, and then dependent care expenses under a flexible spending plan, which is subject to a $5,000 limit. The employee's federal income tax withholding, employers are required not only to withhold employees' taxes and then pay them to the U.S. Treasury, but also to keep records of the names and addresses of persons employed, their taxable earnings, the earnings subject to tax, and withholdings, and the amounts and dates of payment. The amount of federal income tax withheld from an employee's earnings depends on the amount of his or her total earnings, marital status, and number of withholding allowances claimed. A withholding allowance is used by employers to calculate the amount of income tax withheld from an employee's paycheck. The more withholding allowances an employee claims, the less income tax an employer withholds from the employee's paycheck. An employee is entitled to one personal allowance for the taxpayer, one for his or her spouse, and one for each dependent. An exemption is an amount of an employee's annual earnings not subject to income tax. Each employee has to fill out an employee's withholding allowance certificate, a W-4, which is shown in figure 2 there at the bottom of page 291 and also on this slide. The employer retains this form as authorization to withhold money for the employee's federal income tax. So you can see here, when you get a job, you have to fill this form out, and on here you are allowed to claim allowances. The more allowances you claim, the less tax that will be taken out of each of your paychecks, which is good because you have more take-home pay. But on the other hand, there is more of a possibility that when it comes time to file your taxes, that you'll actually have to pay in tax. The less allowances, like you could claim 0, and then you can even ask them to take money out of each of your paycheck. And if you do that, you're almost guaranteed you'll have less disposable income, less take-home pay. However, at tax time, you're more likely to get a tax return check. So moving on here to publication 15, Circular E, the Employer's Tax Guide. It contains the rules for depositing federal income, Social Security, and Medicare taxes, and contains the withholding tables for these taxes. This publication is regularly updated to reflect changes in tax laws and withholding rates. Publication 15, Circular E, also describes filing requirements for official employer reports and is provided free of charge by the Internal Revenue Service. It's available on the internet at irs.gov. Accountants responsible for preparation of payroll registers and forms should be familiar with the content in this publication. The wage bracket tax tables found in publication 15 cover monthly, semi-monthly, bi-weekly, weekly, and daily payroll periods. The tables are also subdivided on the basis of marital status. To determine the federal income tax withheld, perform the following steps. Step 1, locate the wage bracket in the first 2 columns of the table, and then find the column for the number of allowances claimed and read down this column until you get to the appropriate wage bracket line. An FYI, federal tax rates change frequently, but the procedure generally stays the same. We will use a tax table given in this chapter for all computations. So the one that's on page 293 in your book is what will be used for your problems in your book. A portion of the weekly federal income tax withholding table for married persons is reproduced in Figure 3 on pages 293 to 294. Assume that Mark Anderson, who claims 1 allowance as of October 11th payroll, has gross wages of $1,124.58 for the week. As $1,124.58 falls in the 1,120 to 1,130 bracket, you can see from the table that $115 should be withheld. So trace your finger down. Actually, we're going to have to look on page, and they actually have it highlighted on page 294. And then you trace your finger over to the 1 allowance column. There's your 115. That's how you figure out the income tax withholding. Note the heading of the bracket of the columns at least, but less than. A strict interpretation of the $1,120 to $1,130 bracket really means $1,120 to $1,129.99. Therefore, if Anderson's salary were $1,130, it would fall into the next bracket. So the employee state income tax withholding, many states and that levy state income taxes also furnish employers with withholding tables. Other states use a fixed percentage of the federal income tax withholding as the amount to be withheld for state taxes. In our illustration, we assume that the amount of each employee's state income tax deduction is 20% of that employee's federal income tax deduction. So you don't have to use a table for the state withholding. It's just going to be 20%. So for Mark Anderson, in the example, his state withholding would be 20% of the $115. Employees' FICA tax withholding for Social Security and Medicare. This is on page 292 at the bottom. Let's read the FYI first. At one time, Social Security and Medicare were not separated for tax computation, and there was a limit on Medicare taxable earnings. Now, all earnings are taxable for Medicare. So let's read about this. The Federal Insurance Contribution Act provides for early retirement benefits after a worker reaches age 62. Currently, full retirement benefits are available at age 66, and the age will eventually increase to 68. FICA also provides disability benefits for any worker who becomes disabled, including dependents, and a health insurance program after age 65, which is Medicare. Both the employee and the employer must pay FICA taxes, which are commonly referred to as Social Security taxes and Medicare taxes. The employer withholds FICA taxes from employees' wages and pays them to the U.S. Treasury. FICA tax rates apply to the gross earnings of an employee during the calendar year. After an employee has paid Social Security tax on the maximum taxable earnings, the employer stops deducting Social Security tax until the next calendar year begins. Congress has frequently changed the schedule of rates and taxable incomes. But as explained earlier, in this text, we assume a Social Security rate of 6.2% of the first $118,500 for each employee. And after that, Social Security isn't taxed anymore after they've made that amount of money. And a Medicare rate of 1.45% of all earnings for each employee. Of all earnings. So Medicare, there is no limit. Both tax rates apply to earnings during the calendar year. Tables for Social Security and Medicare tax withholdings are available in the Internal Revenue Service Publication 15. So now we're back over here to page 295. Let's return to the example of Mark Anderson. So we've got, I think this is the practice exercise here. Who had gross wages of 1,000, I guess this isn't the practice exercise. We'll get to the practice exercise here in a second. Let's take a look at page 295 in your book first. Let's return to the example of Mark Anderson, who had gross wages of $1,124.58 for the week ending October 11th. Suppose his total accumulated gross earnings earned this year prior to this payroll period were $44,960. Anderson's total gross wages, including this payroll period, were $46,084.58. You're just adding what he's earned so far for the year with this pay period's earnings. Because the Social Security tax applies to the first $118,500 and the Medicare tax applies to all earnings, Anderson's earnings are subject to both taxes. For Anderson's Social Security tax, you're going to multiply $1,124.58, this pay period's wages, by 6.2%. And for Medicare, so then you can see he owes $69.72 for Social Security, and Medicare, you're going to multiply this pay period by 1.45%, and so he owes $16.31 for Medicare tax. Here's another example. At the beginning of the pay period, Grace Wallace had cumulative earnings of $115,600, which is $2,900 less than the limit. During this pay period, she earned $3,010.35, which is greater than $2,900. Thus, she must pay Social Security tax of $179.80. So, she only has to pay it on $2,900, not her full pay for the pay period, because $2,900 will get her to the limit of $118,500. However, because the Medicare tax applies to all earnings, she is not exempt from any Medicare tax. So her Medicare tax, you can see how they calculate that. It's all of her pay period earnings multiplied by 1.45%. Because Grace's cumulative earnings after this pay period are over $118,500, any remaining pay will not be subject to Social Security tax, but will be subject to Medicare. Okay, so let's take a look here at the practice exercise. Using figure 3 on pages 293 to 294, calculate the federal income tax withholding for an employee who is married and is paid weekly and whose wages are $1,360 with one withholding allowance. Okay, so let's find that first. Okay, so 1,360. So I'm looking at page 294, 1,360. So it's way towards the bottom. It falls in the range 1,360 to 1,370. I'm going to drag my finger over to one allowance, and it looks like $151 is what will be the federal income tax withholding for this employee. Okay, then it says, then calculate the Social Security tax and Medicare tax for the employee, assuming the employee has cumulative earnings of less than $118,500 for the calendar year to date. So then you're going to take, let me get my calendar, or my calculator. So to figure Medicare, or let's do Social Security first. Social Security is 6.2%. So this employee's earnings is $1,360. And so we're going to times it by 0.062. So it should be $84.32 for the Social Security, which right here is showing. And then you Okay, so we did that right. $151 should be withheld for an employee who is married, paid weekly, and whose wages are $1,360 with one withholding allowance. Social Security and Medicare taxes would be computed as follows. So then right here, $1,360, because it's all under the limit for Social Security, and Medicare is paid on all earnings. So starting with gross pay, an employee's pay is reduced for federal and state income tax withholding, FICA tax, and other items such as retirement and so on to arrive at net pay. Okay? And again, you know, if this is $151, the state withholding, according to the problems in the book, will be 20% of the $151. You're going to want to refer back to this in page 295 to help you with your assignments.